It's a hump day, so happy hump day to you. Hope you're feeling well, and the bank account's looking good. Is it looking good? I hope so. Not a lot from me so far this week in terms of trade results, except there is some good news, and I'll share that with you in the not too distant future. Trades we've taken so far this week, no real results out of those, and we're in a little bit of drawdown on pound Kiwi, I think, which is the only one I'm in at the moment, apart from, of course, that long-term Euro CAD trade that we've been in for 2 months, nearly 2 months, and we hit TP1 yesterday or overnight. Yay! 2 months. It's probably the longest time I've ever had before hitting a take profit. Let's start with, hi Helen, how are you? Let's start with the usual, the breakout trade, which we could do with a winner there. We really could. Let me see how that works. Something's amiss here. There we go. That should be better. Hi, Paul P. Righto, today, what have we got? We've got 5 1-hour candles. That's what we're looking for. And look where we are. We're sandwiched absolutely in between the weekly pivot and the month and the daily pivot. So if we're going long, the weekly pivot would have to be our target. If we're going short, the daily pivot can't be our target. It has to be monthly pivot for the optimized version. If you're trading my version, then you'd be taking first profit, I would think, at around about 40 odd. Yeah, you'd be taking profit before the weekly pivot. If you were going short and not adding any filters, you would 25, say, you would not be taking profit before the daily pivot, and that is terribly dangerous. Terribly dangerous. Anyway, that's not how we're working it. We're not adding filters. We're just doing it. You got the biggest pot of gorgeous orchids. How lovely. That was for your birthday, I think. That's 2 days ago, wasn't it? That's lovely. Orchids are a girl's best friend. No, it's diamonds, isn't it? That's right. Right, let's set, we can set the short. And gee, that'd be a terribly, terribly dreadful trade. I would never take it. 1.39362 becomes 1.3936. Take 2 away from that. And we've got 1.3934. So again, this is filterless. So we're not adding any filters to this. Although I did yesterday or Monday I refused to take the trade. It was just crazy. And the stop loss will be 3 above the top of that candle, rounded up. 1.41743 becomes 1.4175. Add 3 pips, 1.4178 will be, did I say 1.41? That's not what I meant to say. This thing's thrown me again. 1.39878 becomes 1.3988, and therefore our stop loss for the short would be 1.3991. There we go. That makes a whole lot more sense. 1.3991. Okay. There is no take profit one on this particular form of the breakout trade. It is all out at weekly pivot. Now, the short will be the reverse of that, of course, because we're trading the breakout of the last 5 bars, 3 pips above the high, 2 pips below the low. That takes us bang on the daily pivot just about, which I absolutely would never do if I was adding filters to this, but there you go. I better place that long just in case it does jump into being. So the buy stop is going to be at 1.3991. That's your entry, which it didn't do. 3991, and the stop loss is at 1.3934. There we go. So we've got that one going. That's in the market. Stop loss there. You can't see the entry, but it is just about DR1. Another dangerous entry, especially when you take that into consideration. Oh dear. Not a good entry either way today. But we do have, well, I'll call that a double bottom and a higher low. You'd have to be thinking the first movement here is going to be long. Whether it can sustain that or not is another story. Righto, so the shorts we can put in. I'll just adjust that one first. 1.3991 and 1.3934. Yes. Righto, good to go. Short order is a sell stop. We're not trading this with any money on the table at all, guys. It's micro lots only because we're still in test mode, right? Sell stop at 1.3934. I must say it's a lot easier to remember than my version. And 1.3991 is the stop loss. Now, we do have a few new people in the room in the last few days, so I'll briefly go through this and what we're trying to do now, guys. Diamonds are okay as well. Only sad part, De Beers control it. Scarcity economies, yes. Is this current take now trade? Yes, it is. So, well, it's not really. I know I'm terribly confusing here. We're simply trialing. I'm just showing you this way to do it. And Ash and I are going to get our heads together in the next couple of weeks and actually get this, get the record straight on this. We're actually showing how this version works. It's the optimized version that Peter, the program, did. I'm sure you all know Peter, who's been the programmer with Actions to Wealth for quite some time. And his version of this is trade the last, or the breakout of the last 5 bars. So 1, 2, 3, 4, 5. And obviously that's the low, that's the high. He puts his entry 3 pips above because this is what the computer told him to do. And he puts his stop loss 2 pips below the low of the range, not the low of the bar, as I do. And it's quite the reverse, obviously, for the sell. Now, the one thing that he now does do is he takes his profits, no TP1, no TP2. He just takes everything off the table at what he calls first resistance. Now, there has to be a little bit of license there. You're not going to take your profit at DR1. That just doesn't make any sense. But oftentimes, in fact, I would think most days you're going to find that you're going to be betting odds on, as I call it. You're going to be taking a risk. In today's risk is what? 57 pips. And the reward, which has got to be at weekly pivot, is not even half that. So your reward here is half to 1. And your reward on the bottom side, if it was monthly pivot, is even going to be less than that. What did I say? The risk was 55. Yeah, it's the same as less than half. So to my mind, you've got to be hitting probably 80, 90% to get that into a winning position. But his optimization assures us that it is a winning strategy. I think that needs to be tweaked a little bit personally, but, you know, I'm not going to argue against a computer or a person who programs them anyway. That's for sure. So I think we're probably just in a position at the moment where we're not getting big runs. If you grabbed hold of that one, then happy days. But, you know, at the moment, you're seeing all these little consolidating moves and indecisive moves. And therefore, your reward is very, very basic, given when you go into consolidation, the obvious happens. The daily pivot and the weekly pivot are close together. And if you're in it for a longer time, the monthly pivot joins them. So, you know, that's indeed how I guide, or how I gauge what sort of a range that we are in, where the daily pivot and the weekly pivot are in proximity to each other. And then, of course, that flows on where they are in proximity to price. So I think at the moment, you're getting dreadful reward for your risk on pound US dollar on the optimized version. And I might just have a yarn with Peter in the next few weeks to see if that, because all he does is go click and changes one thing, and the whole dynamics change, and he can do that, in the flash of an eye. It's amazing to watch. So you can say to him, look, Peter, what if we went? What if the parameters said we go to DR2 every day or DS2 every day as a part of the breakout? He'd say, all right, let's try that. DR2, run the bloody back test, and suddenly it comes up with, whoops, your success rate drops to 40%, but your account balance is up 50%. So who am I to argue with computers? I'm not. My version, as I said, for those of you who are new to the show, and again, welcome to you. It's nice to have you on board. My version of this is to trade the last 3 bars, 1, 2, 3 in this case. And what I do is trade the low of the range, which of course in this case is that bar. Same entry, except I use just the bottom of the bar rounded down to the nearest pip, rather than going 2 below it. Stop loss directly above the candle, and first take profit is half of the risk. So in this case today, if we were going short, we'd be looking at a risk of 25, let's say 25. Therefore, we would need to take profit at 12 pips, which is about there somewhere. Highly dangerous from an analysis point of view in my book, but we're not adding that filter currently. So that would be my version. And as soon as you hit that, you then move your stop loss 12 pips from entry, giving you a free trade. If it does break through, then you've got a good chance of getting something out of it. And exactly the same in the opposite direction. You take the candle that formed the high of the last 3 bars prior to London Open, hourly candles we're talking about. So that becomes your entry above that bar to the nearest pip, stop loss below that bar to the nearest pip. In this case today, that would be 40 pips. So we take profit at 20, which gets us beautifully underneath the weekly pivot. So that I wouldn't mind doing at all. That would be cool. Yes, you've got to trade through that high, but I think the weekly pivot's probably a stronger level than that. And then same thing, take half off the table, and your second take profit becomes twice the risk. So in this case, 40 pips becomes 80 pips. That's your second take profit, which would be there-ish. And at that point, you move your stop to entry. You can take some more off the table if you wish, or you can say, well, okay, this looks like it's reversing. Let's just trail our 2 1-hour candles and see how far this can take us. And sometimes you get some nice results out of that. And the thing I think with that version is, if even you get 1 of 5 that actually go a decent distance, and the other, say you get 2 losses, 2 break evens out of the other 2, you're a mile in front trading that version. But anyway, Ash and I are definitely going to sit down one day in the not too distant future and tell you where all those stats lie at the moment. Aren't we, Ash?
We are, mate. Do you know what? Next week, I am pretty much back to normal, so we can meet after the show and run through it. And
okay, cool.
You can get yourself a beer, and I'll have something that's going to wake me up, and we'll do it then.
What a good idea. A whiskey will wake you up.
Yeah, it might actually. I don't have any whiskey in the house. I've not got a lot of booze in the house at the minute, mate. I don't know. Not sure. It's strange. I was listening to a podcast the other day, and somebody was saying about the amount of booze that they're drinking. They've been drinking a lot more during lockdown.
Yeah, I said before, Australia is up about 15%, and I've been very concerned about what everyone else has been doing. I'm up way more than that.
I'm a real sociable. I'm a social drinker. That's the thing. So I don't really I don't drink if I'm on my own. So I don't think we must have a bottle of wine in or something.
No, I don't either. I race out and see if I can meet somebody. Hey, let's have a drink.
Somebody sat on a bench somewhere. Yeah. Yeah, so yeah, I'll get myself something to wake me up, and we will go through it. Interesting day. Helen, you hardly drink. Well, you should be. It was your birthday the other day. That's one day you're allowed to let loose and have a
Absolutely.
bit of a, if you, I mean, obviously you might not want to. I know some people don't even really like it, but if you want to, you should do it then. Lots going on today, mate.
Hang
Probably.
on, just before you say that, Helen, just to answer your question, can you remind me before the end of the show, when Ash is gone, I'll take you through how that actually works. All right? The
What,
trade.
drinking? All right.
Yeah, we'll have a drinking lesson.
Jeff will open up the fridge. Do you know, we haven't had anybody actually on the show for a while, mate. I mean, the mics are always available to open if anybody does want to come on and have a chat. You guys,
Well, perhaps a few, but we've had some new people in the room recently. Maybe they don't know that we actually openly invite them to have a chat with us.
yeah. Anybody wants to come on, just stick your hand up and we'll open your mic up and ask us anything you want. If you've got a trade idea, if you've got some questions, no question's a silly question. Obviously, if you prefer to post it in the chat box, that's absolutely fine. But we do like getting people on board. But yeah, I was going to say, mate, it's an interesting day and probably a bit of a tricky one. I mean, yesterday was quiet, and I think today might be even more quiet. We've got a slew of data and really important data today, as we often do. In fact, as we always do in the first week of the month. And I think it could make things a little bit quiet. I'll grab the screen just briefly here because there is.
Before you do,
yeah,
you haven't done it yet. Just the two trades that I took this morning. This one's in drawdown, pound Kiwi. Was this morning or yesterday? Would have been yesterday. Can't remember. It was yesterday. Something happened to the Kiwi, and I don't know what it is. There was a big move on the Kiwi late in US session.
Was it anything to do with the commodity prices? I mean,
I don't know, mate. No idea.
Commodity prices came in.
I don't think so weaker. Because Aussie Kiwi. That's Aussie Kiwi. So
what time was that? What time was that? MT4.
MT4 time. That was 2000.
So that's 6 p.m. my time. Okay. Oh, I see. Well, Brainard was out yesterday. When was that? Yeah. So Brainard was out yesterday. FOMC member Brainard was speaking yesterday because the used to, I don't know if you saw, but the dollar also had quite a lot of weakness as well.
Yeah, I just couldn't work out what happened to the Kiwi. It's rallied for some reason, and of course that didn't help our trade. Don't know.
Yeah, construction index.
That's Kiwi CAD. Three commodity currencies. The Kiwi's just pummeled the Aussie and the CAD. Don't know why.
Yeah, that's a big bar, isn't it?
Mm-hmm.
It's a big bar, very emotive. Yeah, but the dollar was weakening. It's just stabilized a little bit. It did. I mean, you must have seen the bar on the dollar index, but it was very, very negative yesterday. Closed very, very negative.
And you just shake your head and go, wax on, wax off. One day this, one
yes,
day,
yeah, and it is that at the minute, isn't it? And it's a great environment actually for that. If you pick the right currency. And it's one of those, isn't it, that every single strategy will work probably every single day if you pick the right currency, or every single period if you pick the right currency. I think there's been some really nice ranges in the dollar index. If you're playing intraday, then it's been bouncing to and from some very specific ranges and probably quite nice to play.
Yeah, I was looking at it myself earlier, and I think, gee whiz, I should be trading this. Actually, I can trade it now. I've got a trading view account through, can't remember the name of them, some broker here in Australia, but I think they do offer that, so I can probably trade that now. So I might be trading that ranging.
Yeah, trading view is good, isn't it? Because it basically offers everything. You can basically get every single instrument that is available. I suspect.
Yeah, but your broker's got to be in tune with it as well.
Yeah, that's where the difficulty comes in. And I have to say, a lot of these brokers that offer MT4, I think they're a bit behind the times, mate. I mean, some of the options that you can trade on this stuff is just so limited. You can't trade any sugar or wheat or copper. Well, you can trade copper. Can't trade copper on Fusion, but I think many of them just don't have the options and opportunities. Um, yeah, I mean, you really need what I've found is to get really two brokers. MT4 is quite nice for certain brokers offer really good MT4 charting, and it's well worth having it for that. But you almost need another broker just for some opportunities. I mean, I've got another broker that pretty much offers every time I post something in to try and find it, it's there. It offers just about everything that you can get around the world, not newfound gold, unfortunately. And that there has been a few that I've seen that are missing, but generally speaking, everything is available. But yeah, this stuff. Yeah, you don't have Bitcoin. Yeah, good point. I've got Bitcoin on my other MT4 account, and but it's quite rare. You don't have many of the others, and actually, the UK brokers have stopped allowing you to trade cryptocurrencies, and I don't know why that happened. In some respects, I was quite lucky they did,
Are
but
they
in other
losing?
respects, I don't. Do you know? Well, they shouldn't be, should they? Because they're meant to be trading one person against another. So I don't.
They're
I
meant
don't
to,
know.
yeah.
I don't think it was that. It was some sort of regulation that was brought in by from a government level.
Okay.
From what I suspect. Um, but I was in a lovely little trade with something with a cryptocurrency that was going on, and then I got this email them saying you can only close your position, and I called them and I said, does that mean you're going to close my position in the new year? And she said, the lady said yes, but I've got a feeling that she was maybe not telling me the truth. And if I'd left it on, I would have made like a really, really good amount of money. However, what it did do was force me to go and buy the physical product rather than just trade it. I think we do find a few issues with some of these accounts not really offering all the options that you really need. If you're going to kind of like spread your portfolio around, you do need these other things that are available. But let's have a look through the charts, mate, because it's an interesting day. Now, first of all, let's talk about the data, and let's talk about which data is important. And let's go. In fact, let's go to the start of March. Now, this is so anybody that's new to trading. Zloty. What's Zloty? Oh, we don't have a dollar sing Bitcoin. I don't mind the Scandinavian currency. Yeah, absolutely. Yeah, yes, you're right. Yes, you're right. Yeah, there's a lot of opportunities on some of those smaller currencies, aren't there? You're absolutely right. So yeah, the Nokia. I'm not sure whether that's on this particular MT4 or not, but yeah, you've got the Hungarian forint. You've got the Czech koruna. There's a few out there. There's the rupee as well. The Polish zloty. Yeah, you're absolutely right. And the Romanian leu. There's the Swedish krona. I said about that one. So yeah, there's a few of them. There's a few of them out there that just aren't offered. So even if they're going to focus on currencies, you'd think that they would offer just about every currency you can get. Hey, Lewis, how you doing, buddy? Anyway, so if you're new to trading, let's just talk about some of the data. Now, we're not going to go through every single line of data here and right now because we won't have time. But what I will tell you is that if you are looking for reasons that currencies are moving and they're a bit more volatile than they have been, prior to when you've been trading, then just check what period of the month that you're in, because you will see that there are certain periods where more of the bigger data is posted, and it's usually week 1 and week 4. The first week, I should say, and the last week of each month. Now, the first week's really important. So if we go back to March the 1st, some of the really important numbers. So that the PMI data is now. If we focus on the United States, because most things are really kind of leapfrogging away, on what happens in the United States, then this is where we start to get. So on the first week of the month, you're going to get final manufacturing PMI, ISM manufacturing PMI, and some of these ISM manufacturing prices as well. So that's the manufacturing. And then if we go into day 2, so we're just focusing on the States here, we have Brainard speaking and Daly speaking. There will normally be an FOMC member speaking in the first week as well. And then when we go to day 3, this is an important number, ADP non-farm employment change. And this will be quite pivotal today because this is one area where the market hasn't really shown signs of life, oddly. If you go back to what we've had posted so far, ISM manufacturing PMIs, now 60, that is 10.8 above the all-important 50 mark. Now 50 shows, anything above 50 shows expansion, anything below 50 shows contraction, and the fact that we've got this kind of expansion is a significant print, and obviously we've just come off quite a significant point economically. But if you look sort of like, this is a high number. If you just look at the green line, then you'll see that there are most things are falling below that number. Most of the bars are falling below that number. So that is a high number. And yes, it's coming from a very low base. So it's relative. The expansion's relative. It's not relative. It's not just is it expanding by I don't know, $10 trillion or whatever a week. It's comparative to what it was on the previous print. But that is a good print and a good read for expansion. So ISM manufacturing is showing that the United States in this particular area is growing quite significantly. Maybe even back to where it was previously. And then when we go to what we've got today, this ISM services, again, the previous print was way above the 50 mark. And you can see, it's if you look across the green line, this is a high print that we've had last time. Does it continue up here? Looking at manufacturing, it suggests it probably does. I mean, this is the highest print, this one that we've had really for a year. That was the last time, over 2 years, sorry. So let's watch out for that one. But this is the most important one really at this moment. It doesn't look like it should because it's orange. But the anything to do with employment at this particular stage is really pivotal because there has been decent expansion in the things like services. There's been decent expansion in manufacturing, and there's been some expansion also in CPI data. So, in some of the consumer price index as well. But what we've not seen is the labor market come back, and that's really important. There's a lot of slack, and just to give you the glossary, if you like, when they're talking about slack in the labor market, what they're saying is that there's a lot of people that are waiting for jobs. There's a lot of people in line for each one position. So slack in the labor market is something that the market does not really want. It won't be able to hand if the numbers come out and the markets and the economy starts to overheat and the central bank has to react. One of the tools it has is to put up interest rates, as many of you know. And if they do put up interest rates, then that is going to really affect the people without jobs. They probably won't be savers. On the whole, they may well have mortgages. They'll certainly have. So that
which means it's an absolute deterrent for them to do that. Isn't it?
Oh, mate, do you know what? And this is there's a really interesting study. If you go back to the last financial crisis in 2009, and where people are trying to draw comparisons from 2009 to where we are now, because that was really the last time we had all this excessive printing, it's very difficult to draw comparisons because there was enough in the Fed. That there was enough movement with the Fed when it came down to interest rates to do something, with the interest rates, to lower the interest rates and to make it work. Now they're at an all-time low. They are based out down here, and yet all this printing is coming in. They've literally got nowhere to go, as you say. They can't put interest rates up. And also, if you look at the money supply in the last financial crisis, what we saw was the money supply given to the banks, but the banks not really lending out. Now, in this particular example, we've had that, a genuine money supply going through. So there's a lot of money, just basically floating around the system, which does suggest inflation. Now you've also got this bond yield going up, to 1.4%, just north of 1.4% right now. So the yield curve is steepening, and that is also really not welcome. That's not a welcome yield by the government, because obviously that means that's the amount that they're going to have to pay back at. That 1.4% is what, if people start buying government bonds, the government needs to then pay them back at 1.4%. So they don't really want to see that bond yield kind of creeping up, too high. I mean, it's already, I think it's probably it's a little bit hot. So the question is, what do they do? And I suspect what they'll probably do is borrow on a shorter term time frame. They're probably going to completely change their strategy, which means that we don't really have that much in the way of trying to figure out historically some sort of pathway that would lead us to some kind of conclusions now. I mean, what are they going to do here, mate? Because they,
yeah, you need to ask someone with a higher pay grade than me, mate. I've got no idea.
Well, I think you can ask, well, I think if you did ask people with a higher pay grade than the two of us, then they would probably have some answers. But I think even they would be scratching their
and
head.
they could miss. They could very easily miss. I think, because, as you say, the people who have to make the decisions are probably losing a lot of sleep right now, because they've got to be creative. They've got to be very creative, because where do you go? How do you actually bring some form of stability to an economic situation or a financial burden that, they're all completely way and truly over their heads? I don't know how they solve that. I really don't. Recalibrate is the only answer that I have.
Yeah. I think you're right, Lewis. Sorry, mate. I've just seen that you're taking profit from your gold trades. Are you long or are you short? Are you short from a long way out, or are you long from a near term? From the near term here.
Hi, Paresh. Hi, Andrew.
You're short. Well done, mate. Well done. Yeah, because gold is where are you looking to take it? I suppose you're waiting for a little bit of a reversal here, isn't it? There with gold. I mean, you know that I'm very bullish on gold, and I will remain a gold bull. Yesterday's bar was really interesting. It's it is looking like a potential for a bit of basing out here. Nice little jump off that level, and this may not be ultimately where we stop. We 1680. Yeah, I think. Oh man, you know what? Oh, sorry, that's silver. 1680. Yeah, gold doesn't look quite as attractive as silver, does it? Silver's doing okay. This is where we are. Yeah, I think that's fair, mate. I think that's fair. Yeah, I like 1680 for more buying. So that would be a. Now, silver to 25. Yeah, I'd quite like silver at 25 as well. Can I ask you a question, Lewis? Are you bullish on gold in the long term, or are you bearish? Because that could define something for you. So just having a look. So we just talked about some of those numbers. Now let's have a look around the grounds and see how that's affecting things. I think the pound yen is probably one of the trickiest things to try and get on board. Pound yen is at a potential area for some reversal here. We've got this high here, and we try to get through this point once. So we've got a nice horizontal level here. That was support. Support became resistance. Does it become resistance again? I suspect it probably will. And the other thing about this, we talked about the head and shoulders pattern. That's a really nice breakdown of the head and shoulders pattern. So there's the right shoulder over here. I mean, I've got kind of fed up with trying to trade this, but I may get tempted back in now. It's back at this particular price point. There's your head and shoulders going on there. And great price to try and get in at. So maybe, anything that would look like a reversal in this area looks pretty good. If you were to add a Fibonacci level as well from the highs, I'm going to have to get rid of these drawings. Just make sure I've got the high. The fib is at 61.8% retracement. So this is a great place. Lots of confluence here. Great place to go short. Now it's just a case of, do you get the setup that you want in this area to go short? But a really good place to go short, or, all the way up. I would have thought back to the highs. This is looking a little bit under pressure here. Bullish if I go to 1680 first. Yeah, first I want XTI to 56. Okay, well, let me just make a quick suggestion, Lewis. See if you like this or not. So if you like gold at 1680, the way that I would play this, now I don't know where you went short, so that might dictate what you're doing. But if you went short, let's say you went short somewhere around here, so you got some room, you got plenty of room, and it comes down to that 60-80 level. Let me do it with MT4. Comes down to your 60-80 level, so around about down here. Comes down to around about that point there. Now, this is just a potential suggestion if you fancy it. What you could do is you could buy gold here. Buy gold here, just because it's a good level, right? Forget the setup. You're just literally going to put a buy order in there. You buy gold there. Now, if that is where you were going to take profit anyway, all you are losing is the spread. So you're going to lose the spread, and the spread is going to be tiny, right? So you're going to lose the spread if gold tanks. If gold tanks, you are going to be out here anyway, and you're going to have to close your buy. You're going to have to close your sell. So you leave your sell open. That's the first thing. So leave sell open. Leave the sell. Leave the sell. Buy gold here. If it tanks, you close both positions, and you're going to lose just the spread that you paid for the buy. Now, if it hops up and gives you a higher low and starts to break up, you can put this one at break even and then take profit on the sell. Now, of course, it then may tank, and that means that you're giving up that bit of profit on the sell. However, with the fact that you are free trading straight away, and you're free trading kind of, with a potential bit of protection, if you trade it right, you can still maximize the profit on the sell while having a free buy. If that doesn't make sense, let me know. But I hope it does. So it's just a suggestion. Now the good thing about that is that if gold meanders around in this area, comes down and meanders around, you can just wait and see which direction it's going to go in. And if it does pop to the upside, then you're already in the trade. Obviously, you're going to put your stops at break even on the sell just in case it shoots up, but you're going to basically be in the same amount of profit if it goes right back up to your sell again, because you would have been buying down here instead of closing the position. So yeah, so if that makes sense, mate, that might be worth trying. It's basically a short to go long trade, which is a great play. It can be a really useful play, and the fact that you've got that short in the market, that buys you a lot of time, and it buys you a lot of headspace.
Helen, what's the take on gold? What's the conspiracy theory, please?
Yeah, let us know, Helen. Even come on mic if it's too difficult to type.
Yeah, it'd be a lot easier if you can.
It would be a lot easier. Remember, we are all trading buddies, and we like to express all opinions openly.
Whilst you think about that, Helen, I'll just very, very quickly update a couple of things. Pound US dollar has not been triggered. That's doing nothing. Pound Kiwi still in exactly the same position. We're still in drawdown, but hasn't done anything. Euro pound. I placed an order on Euro pound this morning, and we missed the entry by a very, very small margin, which is a good thing, because that is also, had you been triggered into that, you would be in drawdown at the moment. Nowhere near stop loss, but you're being held up by the pivots at the moment. I'll come back and talk about euro pound because it's a very interesting chart for me. And
Agreed, mate.
you weren't in Ash when we've been in Euro CAD for 2 months, nearly 2 months.
Yes. Yeah. Yeah. You
We
told
hit
me. Yeah. Yesterday you
we
were
hit
saying about it.
TP1, buddy. We hit TP1.
Nicely done, mate. Well done. Well done. Just goes to show what diligence. Now, this is really for you as much as everybody else, Jeff. This is talking about some of the numbers today. This is what we got from the UK, the annual budget. So this is one of the reasons that I'm not that keen on trading the pound yen short, even though I think the fact that the budget is going to be released probably puts the pound in a bit of a holiday period until we do get the annual budget release as well. So important. Talking about important numbers, this is a big one. This is a big one. That's a big release today from the UK.
Oh, yes. I did read a little brief article about a headline more than an article about that. And I thought they would put a little bit more emphasis on it than needed to be, but you're saying that's for good reason.
Sorry, what do you mean, mate?
Well, the journalist or the economic commentator, whoever it was, was putting a lot of emphasis on that.
I see. Yeah.
And I thought it was probably not as big a deal. But you're saying it will be.
Yeah, I think it will. I mean, it might you never know with these things, do you? Because they have played their cards fairly close to their chest during this period. But I think it probably will be quite a big deal because there has obviously been a pandemic to fight, and while there's been in a way kind of budgets that were unscheduled, as the chancellor had to get involved in the economy, this is really the big one. Where do we go from here? Now we've kind of got maybe a better base point, and what's he going to do from this point? Because he could give another stamp duty holiday, which would boost the housing market. He's potentially going to increase the furlough scheme. Tax is going to be the interesting thing. Does he start to tax now? If he does start to tax now, where will the tax burden mainly be shouldered? And at what rate as well is that tax going to start coming in? Because this is what we were talking about earlier. The government have been borrowing from the Bank of England effectively. The Bank of England have been pumping money in just like the Fed have, and the government have to pay that money back. And where the government have to pay that money back, they will effectively get that money from taxes. So it is really interesting. I think it is going to be quite an important release, and it may well be completely benign. We might get nothing from it, but I think there could be some fireworks with this one. I think there could be something that they try and sneak in the back door and probably not get away with it, because journalists are pretty adept at fishing out exactly what's in the statement. They're pretty good at getting the actual detail of what's in the statement, no matter how much.
What's your current VAT rate?
20%.
20%. How long since it was raised?
Don't think it has been raised.
Ever?
Oh God, it would have been at some point.
I'm going to say, gee, that's a high first watermark.
1994. Standard VAT rates 20%. VAT rates for goods and so it was 17.5%. That's right. Yeah. In 2011, it was at 17.5%.
Okay, so a decade ago.
Yeah.
Any talk of that going up?
Because
it's the easiest way, isn't it? It really is the easiest way.
Yeah, absolutely is. No, I don't know that there hasn't been talk of that going up. There's been all sorts of things banded around, mate. But when it comes down to it, because most of it is speculation and conjecture, it's quite difficult. There's a few things that seem to be, relatively concrete. But there was talk about them, going after pensioners and getting the money that way. But the wealthier pensioners getting money that way.
I was going to say that'll be really popular.
Yeah, well, they do need to be a little bit difficult, but everything's about timing, isn't it? And Boris Johnson's.
Someone's got to suffer, and they're going to die anyway, right?
Well, this is the thing, and Boris Johnson's public rating right now is pretty good. You know, I think that people are fairly pretty pleased of how the vaccine rollout has really become the story, and people have, you know, they've got very short memories. But his current ratings are pretty good, and Keir Starmer, the opposition leader's current ratings aren't very good at all, and they're only a year in really to this new parliament. You know, we've got another 3.5 years, and they're not even a year in, if you like, to the current parliament. So if they're going to do anything that's a bit nasty, you would think now's the time to do it, I would have thought, because they can smooth it out, can't they, later in the
they've got to
term?
balance, haven't somehow, because, you know, they're bound to adopt a fiscal stimulus that is substantial. I think that's a given.
Yeah.
Given the circumstances. So perhaps that's why we've seen a pound that's been, I won't say robust in the last week or so, but certainly in the last 6 months.
Yeah, well, I'm interested to hear your views on this euro pound off the back of that, mate. And you know, the European Union has not handled the vaccination rollout very well at all. You know, it's almost like a baton changing, where the UK handled the start of the pandemic very badly. They've kind of now got a handle on it, and they're doing a lot better. But because they banned the AstraZeneca vaccine being taken by over, I think it was the over 55s, or it might be the over 65s, but they banned it in a certain age group. It kind of sent fears right throughout Europe, and many people haven't taken up their vaccine quota. And a lot of the scientists are basically coming out and saying that you're just all out wrong. You're just not right on this stuff. You know, the vaccine is as safe as it needs to be. And we're starting to see, you know, data coming through here that hospitalization has just fallen so dramatically. You know, it's plummeted, and it's showing that the vaccine rollout has been widely, you know, it's been a success, you know, and a pretty significant success. So the European Union are way behind with this stuff, and I don't know whether that comes into your thinking when you're looking at the euro pound or not. But I'm interested to get your take on the euro pound, because I look at the euro pound regularly. Now, obviously, we've got this trend line here that we're stuck against. But if we look back to what happened during the referendum, this was the price of the euro pound. Does it come all the way back down here? I'm not so sure, but I would have thought at least a kind of test of something in this area is likely over the course of the next 12 months to 12 to 24 months. So I would have thought, but I don't know what your take on it is.
Are you ready for it?
Yeah.
Okay. I'll give it to you. Let me share the chart. This is purely technical, nothing more than that. I haven't really taken anything else into consideration, and it's a short-term play. But it's super clear to me. And I really went through this morning. I thought, well, hang on a minute. What have we got in front of us? We've got a market that has got no idea what it's doing this week anyway. But where in the bigger picture are we? And the chart that you just had up showed to me quite clearly what I'm probably about to address, and that is a range that sits in here very, very closely. There's probably two ranges actually, and kind of start over there, and that's the one I'm looking at. There's probably a bigger picture which does confuse the issue, and it starts in the same place, but it's also down here. So that does confuse the issue. And once I look at that, I think straight away that we've got two scenarios. One is we break through here and go to the bottom. The other is we bounce off here, put in a lower high, then go to the bottom. I'm not thinking we're going long at all above these highs, but I do see this bar, this bar, this bar, and I think, okay, we need a little breather here, because we have had support and resistance through here historically for 5 years?
Yeah,
5 years. So, and that bar there suggests that they're not ready to go beyond that level at this point. And I'm not saying that they're not going there, because I believe they will, and maybe
Yeah,
beyond, as you say. But
yeah,
at this very moment in time, I see the potential for another lower high to come in here, and that's what I'm wanting to play. Maybe up to
mm,
there, to that level there, and then when I go down to the smaller time frames, I see a rejection bar there, and the daily chart really does give it to me, where
yeah,
we've come back inside that range with. Is that a morning star for you?
yeah, and a very significant one, because it didn't just go into the body of bar one. It smashed through the
Yeah.
highs
It hammered
and
it, didn't it?
closed
Yeah.
there. Yeah,
And then it's put in a higher low here.
yeah, and it's above that weekly pivot now as well, isn't it?
Yeah. So I thought if I got my entry above that bar, and I like to trade black reversal bars when we're going long,
Mm,
that was just a clear picture for me.
yeah,
It hasn't
yeah,
triggered. We're still in consolidation. The big and one what's the worrying issue for me is the resistance dead ahead, which is the monthly pivot.
mm,
So my first reward here is just absolutely up to SH12. It's terrible, absolutely
mm,
terrible. But if it does go the distance to where I think it'll go, which is last month's monthly pivot, really, then
mm.
for the risk that I'm taking, you're going to get a pretty decent reward out of it.
I like that, mate. And as I say, I think today could be the catalyst. If it's to go, if it is the catalyst, you'd think that it would clear that monthly pivot and then possibly start to consolidate just above it, and then we'll start to see a bit of a climb.
Yeah, well,
Um,
in all reality, the monthly pivot's 2 days old.
yes, that's right. Yeah, that's right. Yeah, yeah. So not really established.
No.
Yeah,
So that level's really not there yet in my mind. This one
yeah.
is. That one
Do you
there
know?
is.
And actually, I might well join you here if we break through the monthly pivot and come back and retest it. Then
Yep,
that's also a way to trade this, isn't it?
definitely. Yep.
Yeah. Um,
And
Lewis,
probably a far better one, really, at the end of the day, because that dreadful reward that you're taking for your first take profit here is going to destroy your reward to risk ratio anyway. So maybe
mm,
that is the way to play it.
mm,
And you've also got a trend line or a trade line coming through there as well.
mm,
So yeah, same thing. Break,
yeah,
retest, go.
yeah.
Yeah, I like that.
Yeah, that does look pretty good, and it's possible that if it can get up to that trend line, pause there, come back to the monthly pivot, then that might be that might even be the entry. But I do suspect it could be today, mate. It might well be today. I'm not exactly sure what time. I mean, it said 10 o'clock on this one, but the statement takes a little while to filter through. So not sure what time we might start to see some movement, but it
Mhm.
might well be today. Could be
And
could
of
be an
course,
interesting one.
if you go back to the bigger picture, the bigger range, then we're due to come here. So
Mm,
it may just fall straight down there, and that's fine. I don't mind, as long as we're not taken into the trade.
mm,
So
yeah,
yeah, that's why I say it's an interesting chart, because it's a little bit mixed, but I think there's an opportunity there to get a reasonable reward out of it,
yeah,
and that's why I took the trade.
yeah. Makes sense. Sorry, Lewis. So, how far will the UK 100 go? It might well go. I mean, it's going to go back to 7,500 at some point, probably this year. Um, Whether it goes from this level is the question, isn't it? I did try and get into this the other day, and price came back and stopped me out on the break even. But I think it's got a pretty good chance. But there is a broader head and shoulders pattern on the UK 100, which well, what I would quite like to do. Do you mind if I just grab screen a moment here, mate?
Go hard, mate. Yep.
What I'd quite like to do with this is see if it can come down to the neckline. I am a buyer of the FTSE for sure. I would just like to see whether it would just come and give me one more opportunity somewhere along the neckline. I'll be a buyer here without any problems whatsoever. um, could have got that one, but difficult one really. To sort of say that was going to be the low. It wasn't that obvious. Obviously, we did try and get it the other day, and we got some profit out of it, but it came back at us. but will it get through this high? And it could. There's nothing at this stage suggesting that the FTSE's coming back. It might get affected by the US market, and I still think that if you're going to go short anything, then the Nasdaq looks like a really good prospect to attempt to go short on. Quite a lot of bullish price action today so far. So it's going to take something. I don't know what. It's going to take something, and but if it comes down to this level again, then I would be a buyer. But that's because I think we're going back here. So depends on how you wish to control your risk, but I think that we're traveling all the way back up to the 7,500, and I think we could be there, as I say, by year end. FTSE's been a laggard when it comes down to the other markets. It hasn't done the same thing at all. I mean, when you look at the weekly, actually, that's a symmetrical triangle, and that looks a lot more attractive now, doesn't it? I mean, that looks like this is the low end of the range, and that's the we're nearer the upper end of the range. So if that can come down to the lower end of the range, right to the lower end of the range, it didn't quite come down far enough, then I am a buyer of the FTSE for sure. And that would, depending on when we broke out, that would lead us back to these highs as well. That gets us within a couple of hundred pips. So only what 3%, 2.5% or something like that on a measured move. So I like the FTSE. I really like it for a long. I have still got a long from this level down here that I'm holding on to, but I was hoping to add to the position. I haven't been able to do that as yet. I also like the Russell 2000. I'm not sure you can trade it on this. No, you can't. But I like the Nasdaq for a short. And this might be the one the one thing that helps the FTSE come down a little bit to give us a decent price point. But you can see here that there is a pattern potentially forming on the Nasdaq. So it's suggesting that there is weakness. It's rejected this area now twice. It's tried to get back up there. It tried to get back up there yesterday. Didn't manage to do it, and it's rejected it. But I'm not sure whether it's come quite far enough or not. It might have done. The Nasdaq short always makes me a bit nervous because it's the hardest one to short. But I was really looking 61% retracement if I could get it, because that left shoulder concerns me. To get short a bit earlier, it does concern me, because that's a whole 300 pips away pretty much. How you can hold the UK for so long? Oh, do you know why, Lewis? It's because I got a really good price, and the reason that I'm holding it is because we're not at that 7,000 area yet. I haven't even moved stops at this stage because we're not there yet. And really, what I want to do is, I think because I got such a good price, it was the low of the year. I think I managed to get. Was it the low of the year? Not quite. Oh, no, it was last year, so that was the low. But it was the low of the move. So I'm trying to add to it, but I think we're going here. So I'd quite like to hold it all the way up to that point there, and then I'll start moving stops on both on both of those up. But the reason I'm holding it is because it will give me some margin of safety for the second one that I want to put on. That's why I'm trying to hold on to it. But so far, I've not had any success of adding to it. So it hasn't really hasn't done its job. It's not done its job for me yet.
Why haven't you had any success, mate? You're looking for setup?
I'm looking for price. I just right. The price, but what I really had, if I go on this one here, that gives me that, and it came through that area. So then when the price came back to that point, I've either got that or even maybe possibly lower. So what I'm really after, and you can see it better on the daily probably. What I'm really after is if it to give me the low that I thought would be in play. I thought we'd get back to this point here, and then I'll just buy it. I won't worry about a setup. I'll just buy it because I've got that margin of safety. But maybe I should have got in here, mate. I mean, I've potentially judged this wrong. And when I kind of like look at over this, then I can see that there is a bit of a level, but it's just it was a bit scruffy. I didn't I couldn't kind of get my eyeballs working properly because it was just too scruffy a level. Maybe coming down a little bit more. I don't know, but you can see that there's resistance, and support that went through, but then that's a bit cleaner. That's a bit cleaner. That's a bit cleaner. So I don't know. Maybe I've probably misjudged it, mate. To be fair, I think it's possible it's not coming back here. I'd love it to, but I don't know if it will. And if it does, I'm probably going to end up buying at this point anyway, because then it'll get close, and I'll be close enough at that point. But it was looking a little bit far away. Maybe not. I don't know. So yeah, I think I've misjudged it. But the other thing is the bond yield going up was concerning me, and I thought this is one of the reasons that because this was driven really by that yield going up. On top of other things, but that was the big thing that people were getting out of some of those growth names. So I thought maybe we'd get something a bit deeper. I wasn't quite sure how far it was coming down. So to kind of fail, I suppose the second time of asking, because that'd be the first time of asking, to fail, the downside at the second time of asking, it caught me a bit by surprise. So I think I might have to say that I've messed that one up.
It happens.
Yeah. But I've still got one position on. So, and the other thing is, you see, I'm not just trading the FTSE. I'm trading certain things within the FTSE. I've got some stocks within the FTSE. So my thinking as well is that I do have exposure. I have other exposure to the market than not just the FTSE 100 itself. I've got some others. Yeah, I think that the long looks good to me, Lewis. The long looks pretty good to me. So it's too expensive here. But I think it could come back. Sorry, if it comes back, I should say, if it comes back, then I will just go. I'll go in and I'll use the low as my margin of safety. Use the original entry as a margin of safety. Anyway, mate, that's pretty much everything. Gold is not performing at all right now. So Helen was saying that what Gordon was saying is that when gold pops the upside, then the lid will be taken off silver, and I'd have to completely concur with that. Silver's nowhere near as negative as gold. Silver's almost, in my opinion, the better of the two to play because it's just got room. Look at silver's all-time high, and we are practically halfway home. It's got a long way to go. You can compare that to gold. Gold's all-time high is only here, so it's only really got another third to jump before that's at its all-time high. So silver, in my opinion, is probably a little bit better. And I have got silver. I've got both gold and silver. So I'm hoping that they do start to take off, and if they do, and gold pops the upside and takes silver with it, then who knows where silver goes? Silver could go right back up to where it was before. There's also the crypto space, which we haven't really discussed, but I think this is also interesting at the minute. I thought some of the things that Shukri was talking about yesterday was fascinating. What's going to happen to Bitcoin? Is it coming down a bit more, or is this it? Is the retracement done on Bitcoin? I hope it's not. To be honest, mate, I've given up trying with Bitcoin, trying to figure out where it's coming to.
Well, I don't think he's trading it either, is he?
No, he's not. It's
not about trading.
It keeps me. This is one of the things that's keeping me out. I want to get in, but I want to get on at the same price that Elon Musk got.
You're right, eh?
Yeah, I want the 35 or in and around there.
Tell him to sell you a bit of his portfolio.
He could do with getting out some of it, and Ethereum as well. I was thinking about shorting Ethereum the other day. I thought yesterday, and I still think that this is on as well. But there's a trend line here which actually is reacted to really well. But there is also some potential for some weakness when you kind of look at these levels along here, and the Ethereum might be forming a pattern. If it closes above yesterday's high, then I may start ignoring it. But if we get down again today and get under this this level around about the 1550 level, then I think Ethereum could be a selling opportunity. And if it's not a selling opportunity, maybe it's an opportunity to wait for that long. Not in Ethereum, but certainly in Bitcoin. But they are very choppy. At this point, Bitcoin and Ethereum, and as I say, I might well miss the opportunity to get involved, but I do want to get involved in Bitcoin. I really do. But I've got this trend line here that brings us down to potentially this high here, which is around about the 39,000 level. Now, if Elon got in at 35, then I don't mind paying 40, but I'm not paying 50. So that's why that's what I'm doing with Bitcoin, mate. I'm just waiting, really.
That's your stance, buddy. Okay.
That's my
Fair enough.
stance. Yeah.
All good. I've got to trade. You got to go.
Awesome. I got to go. You got to trade. Yeah. I guess I'll see you tomorrow, but next week we'll be fully back into it.
Oh, Ainsley's been waiting for the last. No, she hasn't. She couldn't come in today.
Oh
I
God.
forgot to mention that from the start.
Yeah, I totally forgot about that too.
She's at a porn education night, as a matter of fact.
Okay, I'm not sure if I should ask too much.
I'm serious. I'm absolutely serious.
Is she buying or what?
It's about her daughters being educated at school, apparently.
Oh, okay.
I assume it's about how to avoid porn on social media and.
Oh, and it's a weird one, isn't it, mate? Because obviously, sort of, many years ago that would have been quite taboo, but now it's like it's something that needs to be, because that's
just
the
something
modern
else.
age. Yeah, yeah. That they because some of the stuff that they
No, I'll tell you this story another day.
Okay, all right.
How I nearly got arrested. No, it's a long.
Everybody
it's a long time
that's
ago.
in the room, you better come back to hear this story, just so Jeff can smooth out the edges, I think.
All right, I'll tell you tomorrow.
Okay, that's tomorrow. All right, guys, I'll see you then. Have a good one. Thanks, Jeff. See you later, mate.
Right, mate. See you, mate. Okay, the trade. I've got a trade, guys. It's actually against my bias or my short-term bias. It's with my long-term bias, so it's okay. I get the tick of approval. It's Aussie Kiwi. It's on the hourly chart, and it is a buy. And if you want to follow it, they are the parameters right there. So this is just a classic slingshot setup, basically. And we've come above the daily pivot. We've retested the daily pivot. Actually, this is very similar to the trade that Jure took us into on, was it Monday? Monday or Tuesday? Monday, I think it was. Yeah, it was Monday. Very, very similar. We've got a bit of a base here, and here's the reason I'm kind of not with it, because I imagine that price is going to come down to here before it goes long. And here's where I want to be a buyer for Aussie Kiwi. So I'm far more interested in this level than I am the level that we're currently at. But that said, and I've got no idea what caused this yesterday with the Kiwi. The Kiwi just went nuts there for a while. So that's kind of telling you we need to be a little bit light-handed here, not heavy-handed. But I do see this going back to this level, maybe retesting that and then giving us another lower high or an equal high based on that candle. I think that can be retested for reasons that maybe the market, like me, doesn't know why it actually happened. But I think we can hit this level here, and if that's the case, we will be out and money in the bank. So then I'll be looking probably for shorts. Then I'll be looking for longs down here. So it's a little bit against my range trade, but not so much. Entry level 107.40, and the stop loss is at 107.24. I haven't actually placed it myself. Shivers, I better do that. I'm thinking something like 0.5%, something like that. You can trade on this. I think that many lots gets me 0.5% on this account. And the entry is at 1.0740. And the stop loss is at 1.0724. So 16 pips of stop loss. I better check that. I'm not sure that's right, but I'll check it. There we go. So stop loss 1.0724, that's correct. And the entry is 10740, that's also correct. So 16 pips of risk. The first take profit level, and this is where you guys will go, what? Why is he doing that? Is at 107.47, which is there. And the reason, because I don't want to trade through that high. That's the reason. And at that point, those of you who don't know how I trade, you'll take profit there of half of your stake, and you will move your stop loss, what is it, 7 pips? 7 pips from entry, so 7 pips underneath your entry level. That means you'll be in a free trade if you hit TP1, and then when you hit TP2, which is, I haven't put that level up there, but that level is 107.71, we'll call that. I'll put that up there. That's target. It's not TP2, it's target. So all out there. 1.0772. Why didn't that work? Oh, because I'm up there, you maniac. Yes, I often talk to myself like that. Oh, 1.0772. Right, happy days. Now, if you want to follow that, that is it. Has the pound triggered? No. Inside bar forming. So there's not a whole lot happening in pound terms. So that gives us an opportunity to do exactly as I just remembered as I look at Helen's post from Shiv. My entry on gold, 1728 buy. Will it hit 1732 or 1734? I'm not sure if that was answered by Ash. Probably not, because that's a message to me. Shiv, I don't trade gold. I've got no idea. I really don't. So I'd rather not give you my opinion, because my opinion counts for very little. It really does. It really does. I can give you a technical opinion, but gold is a lot more than technical, very volatile. So I'd rather say no. I'd rather say I don't want to answer the question, rather than give you information that really I have no qualifications to give you, if that's okay. Right, trade manager for Helen. I've got a bear chart somewhere. Yes, I do. Okay, so Helen, what was the issue when we're trading the breakout trade? Is that right? Tell me what the issue is, and I'll tell you how to solve it. Well, I hope I can tell you how to solve it. I'll probably need a new chart. So we'll charts window. We will go template me. Ask for TP in pips. Auto offers 30 pips. Okay. That one I can do. So you bring your trade manager on, obviously. Okay. Ready, set, go. There it is. Strategies. Wow, something really slow. Oh, that's because it's asking me questions. So click the slingshot strategy. You go normal stuff, whatever your risk is. And instead of going break of bar, you just uncheck that box. Use your levels, whatever they may be. Let's get something out. So what have we got? I can't remember the levels on this. let's go with something outside that's not going to happen. 140.20 or something. 140.20. And stop loss is, let's say, 138.20. Get rid of take profit pips because we don't want to know about that. So just ditch that. Then you go to TP1. Ask for TP1 in pips. Auto offers 30. Yes, it does, dependent on the time frame you're on, right? So if you're on a 30-minute time frame or an hourly time frame, it shows market entry. Yeah, the bad term. That's just a bad term, Helen. It's actually not market entry. It's the price you put in here. And I've got no idea why they call that. It's not, you're not going in at market. No. I never, ever, ever, ever repeat that. Ever, ever, ever go in at market. Never. Did you get that? I don't go in at market price. So it's not market price. It's whatever you put in here. That's what will be recorded and triggered. So then you just go, I never use, well, that's not true. These are defaults, right? And they're based on history. And the history, quite frankly, is a little bit old or long in the tooth these days. And it's not relevant for every currency pair. It was used on euro dollar 30-minute chart. And historically, we're actually using 10 pips. In the day, the good old days, when 10 pips of TP1 was easily achieved and quickly achieved. You know, it was just a matter of seriously, and you guys have not seen those days, and I don't know that we ever will see those days again. It was simply a matter, once you had that system down pat, it was simply a matter of turning up, putting your levels on, and seriously, you would get an acceleration through here like no tomorrow, and it would go straight to there. And you can either get straight out or take your profit one. Then it'll probably come back a little bit, retest the level, or take you out, one or the other. And then it would go again to the next resistance level. It was honestly just so easy to do. And you guys have not seen that if you haven't been trading for 10 or 15 years or 15 years. But that's not the case anymore. So we have to adjust to that. So 10 pips is no longer reliable in any way, shape, or form on any currency, in my mind, to get what I'm looking for, a very quick TP1, stress out of the game, don't have to worry about it. And away you go. So now we've nominated 6 pips on a 30-minute or 1 hour chart. But if you're on a 4-hour chart or a daily chart, you'll notice those are different, of course. The take profit level, or the target, if you like, is indeed set at 30 pips on a 30-minute chart. And there's good reason for that. And I don't have time to go into it, but it's based on ATR/DR1, DR2. So there's always resistance ahead of you. And over time, I worked out that those levels, that DR1 level, if I'm going long, DR1 or DR2, one or the other, or even the weekly pivot, is going to be within 30 pips of my entry. No matter where I enter, I'm going to have one of these, if not two of these, 30 pips away. This is euro dollar, right? So that's why I set 30 pips as the target, because I knew I was going to run into resistance. So if you're trading it on an EA, for instance, as this is, then you just walk away and the 30 pips is hit. Obviously, that's not going to be the case 100% of the time. But over time, it was the case. And as I say, maybe we need to tweak this a little bit. But generally, you'll find that I'm going to give you levels anyway. And if you learn from those levels that we're using, the pivot levels in particular, if you're trading intraday, then that should hold you in pretty good stead. As long as you understand the process, you shouldn't need the EA. But the EA is very good because you can walk away. Absolutely. I get it. So that's why we've got a nominal take profit one of 6 pips because we want to be out of there at 6 pips and we want to close half of the position. I nominated this as a little bit better than half because psychologically, if you're starting to trade and you get TP1, you've closed a little bit more than half. Your stop loss is hit. You've actually won something. It's a completely psychological thing, and that is all. No more than that. Look, Helen, one day when we work out how we're going to deliver this education to you guys, you'll find that extremely interesting. It is really interesting. Intraday charts talk to you. You know, they're leading indicators. The pivots are leading indicators. They actually tell you what's going to happen. They really do. I'll give you, for instance, in a minute. And it was all to do with the trade we took on Monday, right? Excellent. Absolutely worked perfectly. So where are we? I was talking about, right, so you just set that whatever you want. I very seldom these days use that. I get rid of it, and I use that one, which is the take profit level, which is why I always give you a TP1. So you put that level in there, blah, 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 blah. Whatever it may be, 142.34 will do, just for exercise. I don't take 0.55 off anymore. I take 0.5. And whatever that is, 42.30, so it's 214 pips from entry is my TP1. Then I'd make that 214 pips as well. That gives me a free trade straight away. TP2, generally I would leave that, but oftentimes I will have a target for TP2. Let's say it was there. Then I'd set that level as my second take profit. And then you place the order, and you've got a target. As you know, you can't change the target on here. So you have to modify it. So the target level is why hasn't it come up? It has, right, okay. So the target, as you know, is set at, target's not there. Oh, because I got rid of it, right? I cancelled it. That's why it's not there. You can set the target if you want. You can leave it at 30 pips. That's not going to help you stop. It's not going to help your risk to reward on this particular trade, but yeah, that you can do very, very easily. Have I explained it, Helen, to your satisfaction? Are you okay with it? Or do I need to tell you more? And I was going to say something else that crossed my mind then, and I can't think of what it was. Somebody might remind me of that. Aussie Kiwi, no entry. Pound, no entry. Pound Kiwi is not moving. How did you get the second box under the entry level? Okay. Let's go back there. What was I on? This one. Okay, so second box under the entry level. Let me start again. We'll cancel this, right? Oh, it's already deleted. It's not there. What am I looking at? Oh, this is the pound. Gotcha. Right, so pull me up when I get to what you're talking about. Entry level, right, so we get rid of break of bar. As soon as you uncheck break of bar, you ask for an entry level and a stop loss. You put those in, right? I think you're talking about the next screen, perhaps. So the next screen, you go to TP1. The second box, you mean, not sure what you mean. Which box? Stop loss is still there. Take profit pips. Which one are we looking at? Okay, you got it. Cool. Happy days. Glad I could sort that one out for you. We don't want that. We can get rid of that. What was I going to say? It was something I was going to go to, and it completely slipped my mind. If anybody can prompt me on that, happy days. Otherwise, we are out of here. You wonder about pip levels. Why? Because of broker watching you? Is that what you fear? Cause it, you mean on different brokers? Yes, fair enough. I get that. All I can say about that on time frame, really, within the same broker, the pip level varies on time frames. Shouldn't. That's a new one on me. There was something I was going to go with you guys, and I can't remember what it was for the life of me. Haven't shown you dollar CAD. Dollar CAD, we placed dollar CAD on Monday, and it should have expired, as all trades that are daily and less should expire at the end of the day. And nothing changed because we had a doji bar yesterday. So I replaced the order. It's exactly the same order as it was on Monday. And I still have a structural formation that tells me there's a false break of this trade line. There's a break and retest of that trade line and a break and retest of last week and indeed this week's weekly pivot. So nothing's changed for me. I still think that can reverse. EuroCAD, we spoke about that early. We got TP1 overnight. Yay, after 2 months. Pound US dollar looks like it might trigger to the high side. Aussie Kiwi, we just placed that order. You know about that. Where would you cancel this is probably the next question that I should address. I think once that level's taken out, which is that massive bar that happened late in US session, if that's taken, so if there's a close below that, then yeah, cancel your order. Pound Kiwi, not much to do there except wait, and hopefully we'll get a nice rally through our entry point. Swissy yen, I'm looking for a higher low here, but there's nothing on show there on the daily chart. Maybe that's for tomorrow. That looks interesting. If that bar were to close as it is in 37 minutes from now, I would place an entry above it. Stop loss below that bar. Take profit 1, just under the weekly pivot. Take profit 2. Let me have a look at that. Yeah, no, that'll be target. That'll be target. Monthly pivot's target. So entry here, stop loss here, TP1, target. Pound Swissy. Oh, that's what I was going to show you, right? So this was a classic example of that. Now it's since gone on with the job, but we don't know that at the time. So if you're trading intraday, and Jure pointed this out, right? This was his trade on Monday because he saw, I'll go a little bit wider, exactly what we're trading on Aussie Kiwi at the moment. He saw a break and retest, not only of the weekly pivot, but there was also a trend line coming through here. So we had a break and retest of that. And we entered the market, I think it was on an hourly chart actually, Monday. So we entered the market above that bar there because that's just one of my bars, right? And we had broken and retested. There was a trade line coming through here. Broke, retest, enter there. Target, DR2 was right about there. So that's an absolute classic example of what we're talking about. This was a little bit more than 30 pips, but we're talking about pound Swissy, right? It's a cross. It's not versus the US dollar. So it's going to move a little bit further. So entry there, but you still play your pivots. DR2 was there. It was 50 pips exactly to DR2, having risked that. So that was absolute classic what I'm talking about. Now, since then, price came back to the weekly pivot and has gone on with the job, and that's fine. But we're not talking about Tuesday. We're not talking about Wednesday. We're talking about a 30-minute chart that we're trying to get a little bit out of the market from. We're trading intraday here. If you're trading end of day or trend or whatever you're trading, then Your stop loss is down here. It's not here, right? On that candle. And that's the big difference. We're trying to take 1.5 to 1 or something like that out of the market on what it's not a scalp, but it's just trying to get from the market what the markets are prepared to give you on that particular day. And that's all, nothing more than that. If you want to trade something else, obviously there's other considerations. But for me, for the 30-minute strategy or the hourly strategy, that's what you're trying to do. Nothing more. Doesn't matter what happens after here. Doesn't matter. Who cares? Same thing another day. Break, retest, we get in there, we get it again. That's what you're trying to do. Obviously, it doesn't happen every day, but when it does start to happen and continues to happen, just it'll keep rolling. Don't worry about that. So that's it. Euro pound. We spoke about this, but I didn't show you the trade. The trade is, I don't think I showed you the trade. Yes, I did. We spoke about it. The trade's there. Stop loss is there. I'm not going to change that. If we get a close below the stop loss, then I would indeed close the order. But until that happens, I still think this has got plenty of opportunity to go long. So that's where we're at, guys, or that's where I'm at on this Wednesday. And it's hump day. Let's see if we can get over it, eh? Have a good one, and we will see you tomorrow at the very same bat time and the very same bat channel.